Portugal Senior Trading Manager with GDM. Today's session outlook, first day of the week. We have a lot to talk about, especially on the US dollar that actually started the week on a positive footing, 3-week high for the dollar against a basket of major currencies. And of course, after a key US Federal Reserve officials reinforced the central bank's commitment to continue raising interest rates throughout the whole year. Looking at the New York Fed President Willem Dudley and his speech on, as he said that Fed might avoid raising interest rates at the same time that they're actually starting to taper their $4.5 trillion bond portfolio, prompting that only just a little pause could be, and I quoted there, needed in the central bank's rate hike plans. Of course, his commitment to bolster the US dollar, of course, and its gains could come to a full true. Of course, financial markets were also watching out for developments in the Syrian civil war, of course, where the following latest US missile strikes on the air base in Syria, which had, of course, given the preferred safe haven Japanese currency and gold prices pretty good boost last week. Geopolitical tensions, however, in Asia were also in focus after the U.S. decision to move Navy strike group towards the Korean Peninsula. That, of course, is following a provocative missile test by North Korea. There is a lot of fundamentals throughout the week, ladies and gentlemen. First of all, today we're starting with Fed Chair Janet Yellen's speech, which, of course, is later today. Also, we're looking at the labor market conditions index, which of course could also affect the US dollar versus other major currencies and commodities as well. Also looking at tomorrow, that is mostly for United Kingdom. We're looking at the producer price index, the consumer price index, and of course the producer price index as well. Out of the European Union, we're looking for Germany, the Z survey, of course, for economic sentiment, industrial production out of the European Union as well, and of course retail sales again later into the trading session for United Kingdom. Also, Wednesday, however, is mostly for China data, which is coming for the PPI, also producer price index, and the CPI, the consumer price index for the country, and of course unemployment rate and claimant count change for the British economy. We will see what would happen there on Wednesday, and of course monthly budget statement later through the session in the US session on Wednesday for US. Also on Thursday, we're going to focus again on China, imports, exports, trade balance, and of course all of this year-on-year and month-on-month for the Chinese yuan, and of course for the US dollar as well. Looking for some pretty good data that should come out of Germany over there the same day on Thursday. Consumer price index, and of course harmonized index of consumer prices. And the usual job data out of the US on a weekly basis, continuing and initial jobless claims. Friday, however, it's Good Friday, but it's also time to release the retail sales out of the US and the consumer price index. That's, of course, excluding food and energy, and the full consumer price index, which, of course, should be a very volatile Friday, but not only a very volatile week in general. However, let's have a look at the chart here, how currencies and commodities are trading this morning in early European trade. Looking at the euro versus the dollar, it fell throughout the previous session on Friday, as we saw some profit taking after the slump in the US dollar, and gains for the euro up to 1.0626, which was the major resistance, which of course was from a technical standpoint was not held, and then on we saw some decline of about 50 pips, but of course the downward direction to be expected to continue probably throughout the session, should of course fundamentals and technicals are supportive for the US dollar. British pound is retracing after the slump on the previous session and throughout the Asian session as well, from exchange rate from above 1.2470, that is about 100 pips, down to 1.2370. as we can see. However, this is right now at the support area at 23.55, which comes roughly around here. Also, of course, that level, should it be broken, we can see some more downside towards 123 and 122.96. Meanwhile, of course, we're looking at some test on the support levels. Now it's slight resistance as the exchange rate between the US dollar and the Japanese yen fell a bit below its recent highs of 111.5657 down to retrace to 111.22, which of course should be sustained. Right now, of course, it's roughly a sideways direction, as we can see that the support and resistance levels are not confirmed here. Therefore, some sideways direction during the European Monday session could be also expected. Looking at gold prices after the roughly, what is to say here, $18 of gains. The precious metal roughly closed a little changed from the previous session on Friday, and of course we are looking at the same sideways direction between the 50 exponential and 200 exponential moving average channel. So for further upsides, we need to see a break above the 1258 area, or for a downside direction, a confirmation below the 1252 or roughly 1248 should it be much more appropriate, as from then on we can see some aggressive movements below the 200 exponential moving average. Crude oil prices a little changed, as we saw some serious upside after the U.S. strike on the airbase in Syria, and of course we saw some movement of a Navy strike group towards the Korean Peninsula. Also, that was, as I mentioned earlier, following the provocative missile test by North Korea, and of course the signal from U.S. towards any other country that they're ready to use force should that be necessary. Anyways, as we can see here, it's going to be a volatile and quite risky trading week. Of course, a lot of geopolitical tensions. Also, there is a tension within the European Union as well, and we can see that it's going to be a lot of risk, but of course a lot of reward over there. And this is what we're going to do. We're going to follow it for you, and of course keep you up to date. Therefore, I'm going to see you again tomorrow in the morning, and we can talk about it again. Thanks for watching. See you then. Bye-bye.